Investing in stocks is often seen as a pathway to financial growth and long-term wealth. Stocks represent ownership in companies, and their value can increase as businesses expand and succeed. Many people are drawn to the stock market by stories of impressive returns and the potential to build substantial assets over time. While the prospect of earning money through stocks is appealing, it's important to understand that investing also involves risks and requires careful consideration. The common perception is that, with the right strategy and patience, stocks can be a powerful tool for achieving financial goals. However, success in the market depends on informed decision-making and a willingness to navigate its ups and downs. Stocks represent ownership in a company, giving shareholders a claim on part of the company's assets and earnings. When you purchase a stock, you essentially become a partial owner of that business. Some companies pay dividends, which are regular payments to shareholders, typically derived from profits. In addition to dividends, investors may benefit from price appreciation, which occurs when the value of a stock increases over time. Stock prices fluctuate based on factors like company performance, market conditions, and investor sentiment. By holding stocks, individuals have the potential to grow their wealth, but they also face risks if the company's value declines. Understanding these basic principles is essential for anyone interested in participating in the stock market. Over the past century, the stock market has delivered substantial returns to investors, often outperforming other asset classes such as bonds and real estate. Historical data shows that despite periods of volatility and occasional downturns, equities have provided an average annual return of around 7 to 10% after adjusting for inflation. In contrast, government bonds typically yield lower returns, averaging about 2 to 3% annually. Real estate investments can offer both income and appreciation, but their returns tend to be more variable and often lag behind stocks over the long term. These comparisons highlight the potential advantages of stock market investing, while also underscoring the importance of diversification and risk management. Understanding these historical trends can help investors make more informed decisions about where to allocate their resources. Investing in stocks carries a range of risks that every investor should consider. One of the most prominent is market volatility, which refers to the frequent and sometimes unpredictable fluctuations in stock prices. These changes can be influenced by economic events, company performance, or global factors, making it difficult to predict future returns. As a result, investors may experience periods of significant gains, but also face the possibility of substantial losses. Unlike some other investment options, stocks do not guarantee the preservation of capital. It's important to understand that while the potential for growth exists, there is always a chance that the value of your investment may decrease. Careful research and a well-diversified portfolio can help manage these risks, but they cannot eliminate them entirely. Several key factors play a role in determining whether stocks are a wise investment choice. One important consideration is your time horizon. Stocks tend to perform better over the long term, allowing investors to ride out short-term market fluctuations. Diversification is also crucial, as spreading investments across different sectors and companies can help reduce risk. Additionally, your individual financial goals and risk tolerance should guide your investment decisions. For those seeking growth and willing to accept some volatility, stocks may offer attractive returns. However, if you need access to your money in the near future or prefer stability, other investment options might be more suitable. Ultimately, aligning your investment strategy with your personal circumstances is essential for making informed decisions. In summary, investing in stocks can offer significant growth potential, but it also comes with risks that vary depending on market conditions and individual circumstances. Key points to consider include understanding your financial goals, risk tolerance, and investment timeline. For long-term investors seeking growth, Stocks may be a suitable option, while those with shorter horizons or lower risk tolerance might prefer more stable investments. It's important to research thoroughly, diversify your portfolio, and consult with financial professionals when necessary. By evaluating your unique situation and staying informed, you can make more confident decisions about whether stocks are the right choice for your investment strategy.